All right, we got it figured out, everybody. Thank you for Gold, Silver Pros, live Wallstreetbets, and Reddit, like fire under silver short squeeze movement. I've had all sorts of technical difficulties today. Zoom did not want to let me get this meeting up. I had to change the live stream settings about 400 times over 2 hours to get everything to work there. Sorry about that, guys. Running 2 computers here. It took me 2 computers to get this running. I apologize. Zoom was just being a big pain in the butt here. We have finally got it going. 2 hours later, we got it. So we're going to get right into it. I've got a lot of information for you guys. We're going to share screen. There is a lot going on right now in the world of silver. We've Wallstreetbets, GameStop, and the stocks are trying to bid up the stocks on Wallstreetbets. Now, a lot of people say that Wallstreetbets didn't really want to get involved in the silver squeeze, and I agree that probably wasn't the original intent of Wallstreetbets. However, I think what has happened was Wallstreetbets lit a fire on a trade that was probably 10 to 15 years old. That's a silver suppression trade, and it is blowing it up into a gigantic forest fire. And it may have been the law of unintended consequences. But in any case, there have been a lot of us have been talking about silver short squeeze for a very long time. And I think we just needed a catalyst. And I think Wallstreetbets was probably that catalyst. And we've seen it blow up on Twitter. I was on 3 meetings on Arcadia Economics channel this past weekend, an options meeting and 2 other meetings, a panel of experts, and then just a meeting talking about what is going on. And there is such excitement going on in this space right now. If you're a precious metals investor and you wanting to get into the metals, this is a good time to get into silver. However, the powers that be are fighting this, and we're going to talk about ways in which they're doing that during this presentation. They're up to their old tricks, but we're not worried too much about it. Let's go ahead and get started. I want to talk about some of the news that we are experiencing. We're going to share screen here and get into the news. The interesting thing is on CNBC, we were seeing just tons of silver articles coming out today. I just heard earlier today for silver, and there was a bunch on the precious metal page for CNBC talking about silver. We never see silver articles on CNBC. We're seeing them here, dated today, February 1st. So for Commerce Bank warns of bubbles in other commodities. We have one here, silver ETF spike, digging into whether a short squeeze could work. We have another one, entire silver industry has wiped out online precious metals. Bob Dole on silver, Mike Santolis, market notes, silver hype. Another one dated today, why what happened with GameStop may not happen with silver ETFs. Jim Cramer got involved. Bob Pisani had an article, and so on and so forth. Look at the silver articles on CNBC. In 10 years, I don't think I've seen this many silver articles on CNBC. That is great news. I don't care what the intent was of Wallstreetbets and the Reddit channel. Silver squeeze is absolutely on fire. It's good news. I think I spent half of the weekend talking about this, probably 15 hours on YouTube. And here we go again. Here's Reuters talking about Chinese investors jumping on silver. Now, this is part of the physical investment. Chinese investors are getting involved. It says here, Chinese investors rushed into silver investments on Monday, pushing up Shanghai silver prices while boosting performance of related stocks and funds. Very interesting. Retail traders on Reddit and other social media costs are rallying share prices. U.S. video game retailer GameStop have now turned their attention to silver, leading Chinese investors to also jump on the bandwagon. That is from Reuters. Today, we have another one, analysis. Reddit is coming for silver, a short squeeze unlikely. Now, it's interesting. This entire, see, I love Reuters because they're the mouthpiece for the bullion banks. We know that. And they very rarely hype up the precious metals trade. Right, they're talking about it's unlikely, and they're talking about silver. The whole story is going into this whole thing, and at the end, there's one little quote about whether this will actually happen. And the trader from London said it's like trying to drain the ocean. So it'll be difficult to get silver price to 100 or 1,000 because it's like trying to drain the ocean. That's it. That's the entire the argument against why the silver squeeze wouldn't work. It's like trying to drain the ocean. No detail there whatsoever. I don't think they're really getting into why it would be difficult. I'm going to actually get into that. We're going to talk futures This is going to be my favorite part of the presentation. You guys have been following my channel for a long time. Know that I like to talk to futures and the smash down. If I can get my presentation software, Zoom, to stop messing me, we're going to go up here and we're going to, there we go. We're on the futures. Okay, now they have not printed today's data. The latest data here is Friday, January 29th. But look at this ridiculous volume over here on the right. We have about an average of 1 billion ounces of silver in volume last Thursday and Friday. We don't have the numbers today. We'll get that probably later tonight or tomorrow. Sometimes I print it same day, sometimes it takes time. But 1 billion ounces. And why have the prices been going down? Well, if we go over here to look at the settlements, ladies and gentlemen, I'm going to show you why. Silver gapped up before the weekend a little bit, and then over the weekend we saw it pop 30 at about 3 a.m. this morning. But the trade late last week, well, here's Monday's data on the settlements. We're going to go down to Friday's data. Sorry, they printed the settlement data, but not the volume data. Okay, so it was trading. They were settling at about 26,914 on Friday. That's why you saw the price not move up, even though there was huge demand going into SLV, the PSLV, which is a Sprott fund, going into physical, which caused a lot of the bullion dealers to basically run out over the weekend or stop selling and then start to run out. There's 188,000 contracts of 5,000 ounce silver dumped on the market at an average settlement of 26,914 in one day on Friday. That's keeping the price down. Why? Because the futures market is where the price is determined in silver, at least here in the United States. And when you're dumping 188,000 contracts of 5,000 ounce silver on the market at 26.91, you're not going to have the price go up. So I'm going to calculate here what that is. 188,733 contracts times 5,000 ounce silver gives us, I don't even know how many that is. That is 900. That's almost 1 billion ounces of silver, as I said earlier. 1 billion ounces of silver dumped on the market Friday. Let's see what happened Thursday. Thursday, they were dumped a little bit more, 191,000 contracts, even closer to 1 billion ounces at 25,922. That's why the price did not rise last week. The price didn't rise last week because they're dumping so much short paper on the market. Now we're going to go to Monday's data because they don't have it for volume, but we can see the estimated volume here. 300,000 contracts with an average settlement of 29.41. That's why silver did not break 30 bucks. 300,000 contracts. Let's calculate how much silver. I don't even know how much silver that is. 5,000 ounces per contract times 311,000 contracts. I'm going to break my calculator. We're going to go over here. Okay, that's 1, 2, 3, 4, 5, 6 zeros. That's 1.5 billion ounces of silver. 1.5 billion ounces of silver dropped in the March contract at an average settlement price of 29.41 today. That's why the price did not break $30 because of 1.5 billion synthetic futures contract positions dumped today. That's why you didn't see it. Now, look at all of that. We're going to go back to volume real quick, and we're going to show you how there's almost no delivery. The deliveries in this market are so thin, it is scary. Not all the contracts will deliver, but typically you'll have some delivery. On Friday, on the February contract, you had 985 deliveries, 985 contracts deliveries. And we're going to go to the month-to-date delivery notices. We're going to come down here to the silver futures. For January. I've got it highlighted right here, January silver futures. It was 1,300 contracts in January, and it looks like we've had maybe not even that many because this is going to be, this is February, 985. So the actual deliveries compared to the volume, 1,385 and 985 is about 2,000 contracts. Now let's go to settlements. Today, we have had 311,000 contracts. We have had, what is that? Not even 0.5% of the contracts that were dumped on Monday were delivered in all of January. That is how much ridiculous volume is going into the silver market. That is ridiculous. That's why the price is not rising. And people are wondering why the price is not rising when you have the retail outlets selling out. You have massive amounts of interest going to SLV last week and now PSLV today. I'm going to show you those charts in a minute. That's why they're slamming it. The bullion banks are slamming it on the futures market. That's what's keeping the price down. So don't lose faith. If you're out there taking delivery of silver, don't lose faith. If you keep doing that, you're eventually going to win. Now we have something interesting here reported on Forex Live. Another way, the second way, guys, they can tamp down the silver price is to raise the margin. What is the margin? Well, when you take a contract on, so let's go back to the volume. Each of these is a contract of silver, a 5,000 ounce silver. When you take a contract on, you're putting in some margin. You're putting skin in the game, okay? You're going to put a little bit in so that the CME group and the exchanges know that you can make good on your contract. That's called margin. It's like a stock account. You put a little bit of margin in there to let them know that you're good for it. They raised it 17.8% in a day from $14,000 per contract to $16,500. What is the net effect when they raise the margin? It pushes the small guys out of the market. Why? When you raise the amount per each contract to 16.5, if you're talking about 311,000 contracts traded in a day and you multiply that by 16,000 a contract, who can afford that? The small guys can't afford that. The family offices, those types of people can't afford to get in the trade. It pushes it to the concentrated trader, the big four to big eight bullion banks, the big players. Additional margin on contracts tends to push down the trade for the small players, concentrates the trade to the bigger players. So when they do that, you know that most of these contracts are going to be the big guys, the bullion banks. We know the top four, the top eight traders, the bullion banks. Okay, how do we know that? I'll show you that here in a minute. But that's what happens. And so the big guys can put a lot of trades on the market, and that's how you get the shorting, because they typically have been the short. If you look at the CFTC COT reports, the bullion banks are the shorts. In fact, let's look up CFTC COT report, and I'm going to show you how we determine that. So here's the commitment of traders report. I'm going to show you live. We're going to go down here to that. We're going to go to metal long format here, and it gives us this really ugly looking, but you can see the commitment of traders report. This goes through January 26th, so this is not the most recent data, but what it's going to do is give us the overall net. So we're going to go down here to silver. So I'm on platinum. Here's silver. So we're going to look at net concentration of traders, all this line right here. Who is short? That would be, ladies and gentlemen, the swap dealers, 47.6%, and it's 8 of them. 4 traders are 35.9% short. 8 traders are 47.76% short. So when they're raising the margin 17.8%, who's able to afford that? It's the big guys. It's the 4 and the 8 traders. It's the swap dealers short. And that's why when you have this many contracts dumped at $29, it keeps it below 30. The massive amount of volume, 311,000. Let's go back up to volume. That's 311,000 volume. Last week we had 188, was it, and 191. So this is what 188 and 191 looks like if we can get that chart to come up. Okay, when you get to 300,000, it's all the way up here. It's those bullion banks just pounding that short paper, keeping 30. They're trying to hold the line on 30. They're freaked out. Why? Because they have massive short position. If it pops 30, it's going to run. 30 is a resistance point. If it goes through 30, it's hitting 32. Then it's hitting 35. Then it's getting closer to 40. Those are the resistance lines that we see in the silver chart. That's why they're going to pound it and raise the margin, because the big guys, the 4 and 8 bullion banks that are short, the 4 or less traders, the 8 or less traders, short is going to be those bullion banks. That's how they pound the market. That's what determines the price. It's the futures contract guy that determines the price. It is not the physical trade. Physical trade, as I showed you with the deliveries, is such a small part of the market. That's the physical trade. 1,300 contracts in all of January, 985 in the February contract deliveries for silver. That's 2,000, and you're seeing what's trading on the settlements on Monday alone. 2,000 physical against 311,000 paper. Who do you think's going to win? It's the paper, but that's temporary, because if the price keeps rising, they're short they could get caught if people stand for delivery on the COMEX and we start getting more deliveries and they run out of silver. We could have some issue. We'll show you that here in a moment. Okay, I want to get to the PSLV. The PSLV is basically the Sprott Silver Fund. It's a Sprott analog to SLV. When the move started last week, it was an SLV. Why? Most people know that SLV. That, by the way, the custodian of that is one of the aforementioned short bullion banks, JP Morgan. So JP Morgan, the aforementioned short bank that's dumping all this damn paper in the futures market, keeping the price down, also happens to be the custodian for the SLV. But people know the SLV because it's available in funds and they'll go invest in that thinking they're investing in silver. By the way, if you're a shareholder in SLV, you have zero, and I mean zero claim to the actual metal. Only the authorized participants, including the bullion banks, can access that metal. So if you're in the SLV expecting to get silver, it ain't going to happen. And JP Morgan, who's shorting the futures market, pushing down that price, also happens to be the custodian of the physical silver in the SLV. So if you guys are investing in SLV, I'm not your financial advisor. And I'll do a disclaimer here. None of this is financial advice. It's for pure entertainment and research purposes only. Contact your financial advisor before you do anything. Don't do anything. Don't make any financial decisions before you contact your financial advisor. I'm not one. I don't have a Series 7, 6, 63, whatever. Don't listen to me for financial advice. This is for information, educational purposes. But so I'm going to make that disclaimer, and that covers the whole video. But going forward, if you're in the SLV, it is a fact, according to their prospectus, that you have no claim to the silver. It's a share. And JP Morgan is one of these massive shorters on the COMEX, keeping the price down. Why would you go buy the SLV? I don't understand. Go to the PSLV as an analog, as an alternative, because according to Sprott, and this is according to the website, you can look it up for yourself. When you get into the PSLV, you're getting into the actual metal. It is not a derivative investment. It's metal ownership. You have rights to that metal. And you can see the info. Look at February 1st. Bam! Look at all people pounding the PSLV. Why are they pounding the PSLV? Because people like me and Chris Marcus of Arcadia Economics, all these people got on all these live streams on YouTube this weekend. And we started talking about get out of the SLV, go physical. One way to go physical, if you don't want to store it at your house, go the PSLV. That's a way to do it. You can also do it by buying and storing in these overseas. A lot of them will store at Brinks, and there are hundreds of companies that do it, reputable firms. That's another way to do it because you're taking physical off the market. Remember, you don't want to fight the futures. If you fight the futures, they're going to dump 311,000 contracts, which represents 1.5 billion ounces of silver, and they're going to take out the small guys by raising the margin on each contract 20%, and they're going to screw you, and that's how they get the small guys out of the market. You're not going to beat them at this game. You cannot beat them at this game. What you do is you go physical. How do you go physical? PSLV is one way, or you go to your precious metals dealer is another way. Physical, physical, physical. Guys, that is the way to do it there. We're going to stop sharing screen for a moment because I've got more data for you, but I want to talk to you a little bit more about silver. So to recap for guys that just joined, yes, I do believe that Wall Street Bets and Reddit were not trying to get people into silver. I think they're trying to get them into GameStop and AMC. But there has been this undercurrent of fighting the financial overlords in the system through precious metals, because remember, precious metals is the ultimate money. It's at the bottom of the extra pyramid. It is the true value in the system. Or think about it this way: Basel III requirements are making gold a tier 1 asset. It's not the derivatives, it's not the futures market, it's not the SLV, it's not the general stock market, it's not bonds, it's none of that crap. It's gold and silver. So that's what you want to go into physical. That's why I have a picture back here of American Silver Eagle. Go get your American Silver Eagles physical silver. Find yourself physical silver. That's how you break this system. You don't break it playing the derivatives. They've rigged the system. They've got all the money. They've got concentrated traders. They can raise the margin. They can dump 1.5 billion of mystery derivative paper, fake silver on the market to keep that price down. You're not going to beat them there. You go for the physical. The physical, that's what you want to do. Okay, I think we're going to get into another share screen here. We're going to get rid of that one that I just had. I'm going to go to, real quick, I'm going to go to an Excel spreadsheet that I have, and I'm going to show you what's going on with, here we go, we got it right on the screen here. This is the inventory report for last Friday. I haven't even looked to see if that inventory report out for February 1st today, because typically they don't have it till the next day, my time here in Central Time Zone. So we're just going to look at last week's activity date reported as of 129. So we're looking at the overall amount of silver, and something interesting. There were 608,000 net ounces taken out of COMEX, whether it be registered or eligible. And I want to describe for you what registered and eligible are so you can know what they are. So there's three categories, but two main ones where most of the metal sits. There's another one called pledge that nobody really ever follows because there's not a lot there under pledged. Registered and eligible. Okay, so what is eligible? Eligible is not eligible for delivery. That is a misnomer. I think it's done on purpose, actually. I think it's to confuse people because the majority of silver you'll see, and gold, by the way, is sitting in eligible, but it's not eligible for futures. You can't attach a warrant to it. It's private storage. And the CFTC group, and if you haven't seen this, go to my channel. I've done several videos on this summer and this fall where I talked about on April 19th, the CME group admitted they have no idea how much of this eligible, this number right here, this column, this 248 million ounces, they have no idea how much could go to futures contract because it's all private storage. The COMEX doesn't own it. It's sitting in a depository that's one of their approved vaults, but it's not in the COMEX trade. So the 248 million ounces of silver could be privately owned, and the owners could say, there's no way in hell I'm releasing that until I hit 35, 40, $50 silver. You're not going to loosen this up at current prices. That's why it's sitting ineligible. Registered is what's actually eligible for delivery on a futures contract. That's called registered. When it goes from eligible to registered, it goes from private ownership to the ability to attach a warrant to it and to move that metal against a futures contract on the COMEX. They've got 141.9 million ounces in registered, or so they say. Now that equals 12,358 tons, or 38% of all the silver available. This 397 million ounces as of last Friday's data is in the registered category. That means about 2.5 times that is not. It's sitting in the eligible category. Overall, 1 billion ounces traded, average 1 billion ounces traded Friday and Saturday. Keep that price down. And we saw on the numbers earlier, it was a whopping 1.5 billion ounces today to keep that price under 29. The average settlement about 29.14. That's why you saw the silver price not pop 30. Pop 30 early, about 3 a.m. this morning. And then we're going to look at a candlestick chart here in a moment on goldprice.org. And we're going to show how that paper came in today, that 311,000 contracts, and we're going to show you what happened to that silver price. Let me get over to that chart real quick. We're going to get on goldprice.org, and we're going to see this ridiculous candlestick chart on goldprice.org. It's just ridiculous. Let me get to a one-day chart, and then I will share my screen. Ladies and gentlemen, we're going to show you the takedown on the COMEX. So earlier in the video, I showed you the COMEX. I showed you the 311,000 contracts. This right here, where I'm circling with my mouse, is that 311,000 short paper, average about 29 bucks. You see it about 3 a.m. in the morning. We popped 30. It got to like 30.01. And then you saw it kind of sideways trade. And here's all that COMEX paper. Bow, right there. Massive takedown. This is not a normal market. When you see a move like this, hey, ladies and gentlemen, that's not a normal market. Especially when you see this bullish formation and then it goes like this. It doesn't come down in a normal trade. It'll kind of drift down and then go back up. This is normal trade. This is non-COMEX paper smashing. This is COMEX paper smashing. This is 311,000 contracts of COMEX paper smashing. Bam, 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 all the way down to 28 bucks. And then the longs come into rally, and then bam, 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 bam. And so right now we're sitting at about 28.79. Actually, since I started the presentation, it's gone up a little bit. And we expect as trading, most of the trading closes in the U.S. Western markets. It goes over to the Asian markets on the Globex. We're going to start to see the price come back up. So it could creep up over 30 again tomorrow. I fully expect it to. But this is, ladies and gentlemen, this is the way the game's played. Now, how do I know this? Look at the volume. This is COMEX volume. COMEX, this is what determines the prices of the futures market. Normal market, normal volume right here. Smash down 311,000 contracts. Right here, it's so obvious, and this pattern has repeated over a decade. In 2010, 2011, I released a 5-part series on Seeking Alpha. Go to seekingalpha.com, look up my name, Robert Keentz. Go back in my article history back to 2010, 2011. 5 of my first 6 articles were talking about gold and silver price suppression. I talk about this very happening, this very thing. We were documenting it back in 2010 with years of data. Adrian Douglas and Bill Murphy and all those guys were talking about it. And we had a dot chart that showed this exact pattern happening over and over and over again, correlated to the US markets, where all this paper just smashes the price, and it smashes the price. So we're sitting here at 28.79. You can see the price right here. Let's go up to the price up here. 28.78 for silver right now, according to goldprice.org. So that's what we're seeing in the futures price. Well, now we're going to get into something really interesting. Now we're going to get into the divergence of the paper market, which I showed you the first part of this video, and the physical. Remember, this is a paper market price, guys. For those of you not following silver, I've just showed you a crud ton of information showing the paper market. This is a paper market price, and I'm going to prove it because we're going to look at physical here in a moment. We have a nice little article here from Bloomberg talking about retail sites for silver have been overwhelmed for demand for bars and coins. That's your physical, not the paper. That's the physical, okay? So silver coin site sees up as buying frenzy takes hold. This was yesterday at 104 on Bloomberg. They got the story. Dealers, including Money Metals, SD Bullion, JM Bullion, APMEX, said over the weekend they were unable to process orders until Asian markets open because of unprecedented demand. Why? Because they know they're going to come slam the price on Monday. Why do we know they slammed the price on Monday? Because the first part of the video, I showed you the 311,000 contract volume right here, which shows up right here. Thank you very much. That's what they're talking about. All the physical dealers stop selling because they don't know if they're going to slam the market down, and they got to hedge their risk. They buy the physical at a certain price. They got to hedge their risk, and Bloomberg's all over it. Now let's go look at some of these sites. So we're looking at Bullion Star here. Look at the prices. Remember on goldprice.org, it's at 28.75 right now. We're going to go up to the top. It's easier to track. 28.80 now. So I'm in 27 bucks, you know, as they update their chart. What is it on 10 ounce, 367.30? So every ounce is 36 bucks. What is that premium? If it's trading at 28 bucks and Bullion Star is charging 36 bucks, that's an $8 premium. Let's add that up. What's 8 bucks divided by 28 bucks? Bullion Star is running a 30% premium. 30% premium physical over paper, okay? $8 difference between the paper price and the physical price. Get back over there, Bullion Star, $8 premium. Let's look at another site. I think I'm going to go to APMEX next. Let's see if I can get up there, my stupid presentation software. Here we go. We are on SD Bullion. Let's see what their silver coins are running. Oh, by the way, due to unprecedented demand, we're currently experiencing shipping delays of 10 plus business days. Totally understood. Silver American Eagles. Do they even have any? Let's see if they even have any. So $40. Wow. Brilliant uncirculated. $39 on random year circulated. 39 bucks. Okay, let's check out the premium. That 39 bucks minus 28, right? Because we got 28 over here. So 39 minus 28 equals 11 divided by 28. That is a 40, ladies and gentlemen, 40% premium on American Eagles at SD Bullion. 40% premium, unless you buy 1,500, and then maybe you get it down to like a 38% premium. That's the divergence between the physical market, ladies and gentlemen, and the BS garbage paper market. Let's go to APMEX. Let's see what APMEX is doing. We're getting live prices here. So APMEX took off their disclaimer saying they couldn't ship you silver. Let's refresh this page real quick. They took off the disclaimer saying it's going to be a delay in silver. APMEX is probably one of the biggest dealers. Oh my goodness. The Brilliant uncirculated 42 bucks. The random year Brilliant uncirculated 41 bucks. 2020 43 bucks. The Canadian 38 bucks. They're running between 35 and 40% premiums at one of the largest dealer, if not the largest dealer in North America. Divergence, physical to paper. Okay, now we're on JM Bullion. JM Bullion's in the Dallas-Fort Worth area like me. I love ordering for them just because they're there. I'll do a plug for JM Bullion. I have no affiliation with them. Disclaimer, none of the precious metals dealers I have shown you in the video so far, I have no affiliation. I'm just looking at the big ones. But I like JM Bullion because they're close to me, and they usually have pretty good. So we're going to go there in stock silver. Notice how on, when you see on retail sites and they have something called in stock versus everything else, all of this is out of stock and this is in stock, it's because they're running shortages. And we have this, attention customers, due to increased order volume, we are currently experiencing shipping delays of 8 to 12 days from cleared payment. So even though it's in stock, cleared payment, meaning a wire or they receive your check or get your credit card, it's still 8 to 12 days because there's so much demand. Like they're probably hiring people and clearing them background check to handle the silver to send to you because there's so many orders. Why? Because remember what we saw on Bloomberg. Silver coin site sees up as buying frenzy takes hold. Bloomberg was correct. So let's look at, oh my goodness, Brilliant Encirculate equals $40. Silver rounds. Okay, that's not bad. 34 minus the 28. Now, if we look at the gold price, 28, right? Yeah, still holding at $28. So let's calculate on just a generic round, 34.20 minus 28. I think it was like 75. Let's do 28.80. That gives you 540 difference divided by 28.80. This might be the cheapest premium I've seen. That's only 18% here in the Sunshine round. On the Eagles, it's close to 39 to 40%. The Krugerrand, you can get it for maybe about a 20% premium on in stock. Of course, it's going to take you an extra 8 to 12 days past them clearing your payment. So if a wire about a day, credit card right there. Of course, credit card, they're going to add more anyway because credit card's a little bit more expensive. They add, 3.5%, 4% or whatever. You can get a Silvertown Morgan for about 18% premium. British Silver Britannia, that's not bad. That's a 2021 Silver Britannia for only about 18, 19% premium. That's not a bad deal. Sahayi Freedom Liberty Silver Round, that's not bad either. But a Britannia coin, a 2021, oh my goodness, for only about 18%, that's not too bad. That's a lot cheaper than Eagles. All right, let's roll over here to goldsilver.com. I'm going to refresh page. I was looking at this earlier today. 1 ounce silver round, our choice 34. So that's about that 18, 19% premium we saw. Silver, Philharmonic, about 19 to 20%. Boy, they don't have a lot of silver. There are only 4 things here. You can get a 100-ounce bar, and it's still running you 18 ounces over a volume 100-ounce bar. A 10-ounce silver bar, so running you about 17, 18% premium at gold, silver. So we've looked at a lot of the big physical dealers, guys, and man, are they running some premiums? Running premiums. Why are they running premiums? Because the big bad guys of the paper market have slammed down the price. What we showed you guys earlier, they pounded the price down. Let's go back. I want to do that all over again. I want to show you the silver futures. Let me get over here and share screen again. Let's show you that all over again so you guys can get the feel. 311, 1.5 billion ounces of paper settling at 29.41. And what did we see those 1 ounce silver and 10-ounce bars and 100-ounce bars go for? 18 to 20 to 30% premium, depending on the site and whether it was a government coin or a generic rounder bar. This price is so garbage. This is such a garbage crap price. This is the problem in silver. We don't know what the true price of silver is because this crap has been going on for 20 years. If we get rid of all this crap paper sitting on top of the market, we may actually get a real price. And I think those physical sites that you see is probably closer to a real price. But if we continue to have these physical silver shortages, those premiums can go up 50%, 60%, they could double. Forget what the paper markets are doing. The physical prices go up. That's what the true value of silver is, guys. When you get into some sort of crisis, and the crisis is not really, it's not like, we've had the big financial crisis. It's not like the banks are melting down. Deutsche Bank is blown up. The currency is melting. We're having a fiat currency crisis. We're talking about Wallstreetbets getting on there and saying, let's go, attack the shorters. And that inadvertently spilling over into silver. And then people over the weekend saying, okay, we're going to jump on silver. And they first do it in the derivatives in SLV. Okay. And then that freaks out the bullion banks. They start shorting. And then over the weekend, they start getting into physical. This is not even a monetary crisis. If we get into a fiat monetary crisis, can you imagine what the prices of gold and silver are going to go to? They're going to go to the moon, Alice. like they said on the old show, the honeymooners, they're going to the moon. We're seeing 18 to 30% premiums on physical silver because you have some people, trying to defeat the silver shorters by going physical and going to SLV, and now PSLV we saw earlier today. Guys, this is first wave of the momentum. And again, I want to talk about the whole Wallstreetbets thing. I know that Wallstreetbets and Reddit, they're saying, hey, we didn't mean for you guys to do hashtag silver squeeze to get into the silver thing. It was more about GameStop and AMC. Whether or not those were pump and dumps, I'm not even going to speculate. Whether they were or not, I don't really care. In any case, what I think you're seeing is people taking that cue, and it's become a movement. It's become a movement against financial suppression in whatever market. And of course, it was going to spill to the precious metals. The precious metals are the base of all money. That's why gold is a tier 1 asset, according to Basel III. I'll talk more about Basel III. They're the base, guys. They're the physical. It's not that derivative paper crap. And so, yes, any move against financial repression was going to come to the metals, but we're only talking a few days here. We have not gotten to wave 2. This is wave 1. This is baby wave. When you talk about waves hitting shore and you get that little baby wave, and then as the waves get bigger and they get bigger, the big waves have not come. The tsunami has not come. The tsunami will come if we have a bank failure or fiat currency crisis anywhere in the world, especially in the dollar. Then you'll see the tsunami. We're talking little baby waves, okay? We're talking the tide coming in, little baby waves, we haven't hit the big one. So we're in wave 1 of this movement. And this movement, what Wallstreetbets and Reddit have done, even though I don't think they intended to, what they've done is they have opened Pandora's box. Because I've got now 1,000 people sitting here watching my stream. On average, when I do a premiere, I'll have 300 people peak, sometimes 250. I've got four, triple to 4 times that right now sitting in this live stream. Why? That's because you guys were listening to what was going on in these shorted markets. It started with some stocks, and that story spilled out. It spilled out into legitimate money, gold and silver. It spilled out into PSLV and SLV, and the COMEX is having to beat it down with stupid, ridiculous amount of paper, with raising margin requirements to push out the small guys. It's all paper games, guys. My suggestion, not financial advisor, get your physical while you can. You're seeing that divergence of prices. Even with 18 to 30% premiums, they're running out, ladies and gentlemen. They're running out. All-time orders. There was and I forget where this was. I want to say it was on Bloomberg, but it was on one of the major news services. The president, S.D. Bullion, came out and said they had 10 times the amount of silver orders this past weekend than they have average. Again, no monetary crisis. And that's just Reddit saying go short GameStop and AMC. Okay, spilling over into silver, you see 10 times the demand. What's going to happen when we have some sort of real economic crisis, when we have a paper crisis, we have a banking crisis? And now I want to get into Basel. So I've talked a lot on my channel about Basel. I've had a couple of 40,000 view videos on Basel. I've done 4 overall. So I probably had about 100,000 views on the whole Basel topic. What is Basel? Basel III is a set of regulations that came about. The BMS promulgates these. It came about after the financial crisis. After 2008, 2009, Lehman, the whole mortgage meltdown, and the rampant money printing across the world and negative interest rate that came out of that, they sat down and said, we need more regulations. We need to regulate the banking more. Part of that was liquidity measures. So there's a liquidity ratio and something called NSFR, which is a net stable funding ratio. And NSFR is going to affect overall the bank's capitalization on all their on and off balance sheet activities. But where it pertains to the gold market, I'll talk about that here in a moment. Anyway, these regulations are starting to come into effect. They come into effect this year, next year, in 2023. And there's a whole table of them. Look at my previous videos. I got a whole table right off the BIS website. In any case, that's going to require banks to have more funding for their on and off balance sheet activities. What are they hinting at there? They're basically saying if you're in the derivatives market, you got to have real things underpinning that. Gold, silver, cash, okay? Real stuff underpinning all these derivative trades. If you read between the lines, that's what Basel III is. Specifically, the part of Basel III that matters to the gold market and to the silver derivative markets is NSFR, net stable funding ratio. According to that, if you're going to be in those derivatives, you got to back that 85% with the actual metal or with liquid cash. Okay, so let's talk about derivative markets. Let's talk about the CME and the derivatives on top of that. How many of those bullion banks trading all that paper have 85% of that backing? What about the LBMA and the unallocated gold market? We know from past studies, a lot of people have talked about this. I've been on Nick Laird's site, Ronan Manley's talked about it. A lot of people have talked about it, where they've estimated free floating gold in London, and they said it could be as much as 1,200 tons. But it could be a lot less, because of that 1,200 tons, we don't know how much is allocated to wealthy investors. Allocated, meaning is not available for the OTC unallocated trade. It's allocated. So there could be as little as maybe a couple of hundred tons. We don't really know for that unallocated, gold swap market over in London, the OTC. So they may not have a lot of liquidity, and it's a big derivative market. Well, the European Banking Authority came out, I want to say it was 2017, and said, yeah, we have about 15% confidence in that London market because we lack data. And that was bad. And London's like 15%. That's like 1/7. And they panicked. They went to the European Banking Authority. They went to the Federal Reserve in the US, and they said, please, exempt the London unallocated gold trade from these NSFR Basel III requirements, or require 85% net stable funding ratio with like real stuff or cash, right? And they did win. And so then the UK announced that Basel is supposed to come into effect June 28th this year, June 28th this year. There's a few banks I think in Europe are already compliant with. They just announced last week or the last 10 days are already compliant with it. But the whole London banks are like, have to be paying, especially in the bullion market, because these unallocated trades are not backed by 85% metal or cash, right? That would require them to add additional metal in a tight market. We can see the physical market's tight. Were they going to get the metal, or just coming up with cash, or getting out of the market? So the LBMA said it would raise costs, it would slow down the market, it would knock out a bunch of these bullion banks out of the London market and make it a lot less liquid. Yeah, liquidity in terms of the derivatives. Now, we know it's not liquid in the real gold, it's the derivatives. And the way they do it is a derivative trade through private transactions, privately negotiated, unlike the COMEX, which a lot of that's public on the exchange. There's no exchange in London. There's no middle party guaranteeing either side of that trade. So it's an unallocated trade with no guarantee, private settlement. And so what they do is they float a certain amount of gold real. Here's the derivative, and then they keep switching the gold back and forth on all these contracts. And as long as they can keep the shell game going, they can rob Peter to pay Paul in that London market. They don't get busted. But what Basel III does, that net stable funding ratio, I said, you can't rob Peter to pay Paul and play the shell game. You have to back your derivative positions. You have to close it to 85% like this. You have to close it. You have to close all this middle, shell game crap up here to where your physical matches your derivative trade. And so they're supposed to do that in June, I think it's June 28th is when that takes effect for the world. But the UK government and their auditor PwC have both come out, and this is one of my videos, saying they're going to punt it to January 1, 2022. But some of the European banks are saying they're already going to do it, and they play in that bullion market. So there's a lot of pressure on these London bullion banks to comply either this year or show that they have it. And I think what's going to happen, either by June 28th, there's going to be such pressure, or by the January 1 date in which they said they're going to try to actually comply. Between June 28th and January 1, the stuff's going to come down, put it that way. Sometime after the middle of summer, the stuff is going to hit the fan in the London OTC gold market. And we're going to see how much gold is actually there. A lot of that derivative trade, which goes to determining, the spot price along with the COMEX, is going to evaporate. We're going to see the paper trade evaporate, and it's going to be physical. So you have between about 5 and 11 months to get your physical before that whole thing just goes, and you start to see real gold price discovery. And I think they were freaking out about Basel. They were freaking out about Basel the last 3 to 4 years. Enter 2021, Wallstreetbets and Reddit, and this movement against financial repression and suppression, which has spilled over into the precious metals market and silver. And it's like Basel on steroids. It's like they took a shot of HGH growth hormone and stuck it into Basel. And all of a sudden, this is Basel. And now it's like Basel plus the fight against silver suppression, and it's blowing the shit up. It's blowing the shit up in the derivative gold and silver market like nobody's business, and it's got to be freaking out the bullion banks. And that's why they hammer it with 311,000 contracts of crap paper to keep the price below $30. Let's go back. I'm going to keep hammering this point home like there is no tomorrow, ladies and gentlemen. Let me get back to that. I'm going to show that 311,000 at 29 bucks. Okay, we're going to share screen here. Make sure I get the right one here. I'm going to keep, this is Monday, this is today's data. 311 settled contracts at 29.41. Why do you think they're doing that, ladies and gentlemen? Because of what I just talked about. Because Basel III and growth hormone injected into Basel III, that is the beat the crap out of the shorters movement that got started by Wallstreetbets and Reddit, which has spilled over into the precious metals. It had to spill into the precious. If you're going to fight the powers that be in finance, you've got to get out of the derivative market and stop fighting them at SLV and GameStop and AMC in the stock market. It's a derivative. Go to the bottom of Extra's pyramid, gold and silver, right there. That's where you hit them in the gut. If you want to do it, if you're part of this movement, of this Wallstreetbets fight the shorters movement, screw doing it in stocks, screw doing it in SLV. It's not real silver. Do it by going to physical silver. Go to PSLV. Go to all those bullion dealers. Go fight it on COMEX. Stand for delivery. That's where you can hit them in the gut. That's where you stop it, guys, because this is where they're stopping us. When you can put a 1.5 billion ounces of fake crap silver priced at $29 on the market, that's why silver doesn't break 30 bucks spot price. But you go to all the websites and it's sitting at 30 to 40%, I'm sorry, 20 to 30% premiums, because that's what it takes to actually get the physical. Okay, that's what's going on. It's so blatantly obvious. It happened back in March and April. We had the same premium go on the gold and silver market as what we're seeing right now. We had the same premium go on that market when when you had the shutdowns and people panicked. What they go to? They went to gold and silver, and you saw the premiums blow out on physical. Well, guess what? You're seeing it again. And we haven't even had a crisis. Can you imagine if we have a resurgence of COVID and everybody freaks out? Can you imagine if the bank fails and it starts taking down the banking system like we had in 2008, 2009? Can you imagine if the dollar starts to melt down? I mean, this is nothing. This is wave one. We haven't hit the big wave. So the physical selling out, if you plan on surviving the big wave, by the way, the bank failure and the meltdown of the fiat system, you want to go get your physical, and you may just want to suck it up and pay the 18 to 30% premium that I showed you earlier in this video. If you're just joining the presentation, rewatch this where I showed you the premiums on the physical. Man, it is insane, guys. It's absolutely insane. That's what's going on right now. That's what's going on. It's crazy, man. And I put in like 100-ounce silver order through my storage on Saturday night, and before they shut everything down. I got my last 100 ounces. It's already taken a position in my store. I have an affiliation with Glint. Maybe I'll show you guys that in a little bit. That is an affiliation, full disclosure. I do represent Glint. But I have Glint. I have it in safe storage through Brinks. So I'm not taking physical possession here in my home. Want to do it safely. But I took the last 100 ounces, just free cash I had lying around, because I knew something was going to happen Sunday on the open, and boy, did it ever. We touched on 30 bucks before they smashed it. And man, that's just what goes down. That's what happens in panic. This is a little baby panic, man. We hadn't had the big one, guys. This is not 2008, 2009. This is Reddit. This is Reddit. Okay, this is a bunch of guys on Reddit saying, let's go beat the shorters. We haven't, this is nothing in the grand scheme of things. I'm sorry. The silver squeeze movement is nice, and I love you for doing it. And it's blowing up Twitter and blowing up YouTube. This is not a financial meltdown. Can you imagine what's going to happen when this stuff hits the fan in financial meltdown? All right, I'm going to go over here. I got another computer scrolling the chat, and I'm going to see if we got any questions. Church of Entropy, the markets are stupid and momentum based now. S&P and ASX went up 49% because it has silver in the title. That's right. Thank you for tagging me on that one. I agree. It's a derivative market. Go get your physical. If you want a fund, do PSLV Sprott. Placed my order on Saturday night before the shutdown. There was far too much noise for it to be just hot air. That was a comment by JDO. Good job, JDO. The movement did not start on Reddit. Bill Case said, I agree. This movement's been going on for a long time, but I think Reddit was the catalyst that lit the forest fire. I think it was the catalyst that lit the forest fire. Let's see. Just the Reddit thread alone boosted the silver market. Standing mannequin, I agree with you. Let's see. You guys have questions, post them in the chat. Post the questions in the chat, I'll answer them. I want this to be interactive. Do you have a year-end price prediction for silver? Pete Devine. You know, I was talking about this with Chris and Arcadia Economics, and we were throwing out crazy numbers, 50 and 100. I don't want to go public with that and say that's our, but it would not surprise me if we popped 50. No, 49 to 50 was the all-time high in 2011. It touched on it, came back down, kind of settled on 35 for like a while and came back down. I think pop easy. If this movement, if we get into wave 2 of this movement where it hits broader retail and we have massive silver shortages and it starts to put pressure on that stupid paper scheme, we could pop 100. There, you know, and you could pop higher than that. If you get into how much silver there is against how much money there is in the world, I mean, you talk like 20,000 or $20,000 gold and what, like $5,000 silver. I mean, easily. But this year, I mean, $50 is probably safe to say. Again, another disclaimer, not your financial advisor. This is all for entertainment, educational, research purposes, okay? Don't trade based on what I'm telling you. This is the second time this presentation I've given this disclaimer. I'm not a Series 7, not a registered broker. Don't represent you. Go talk to your tax guy, your financial guy, do your own research on the internet, so on and so forth. Validate everything I tell you. But in any case, I think $50 probably fairly safe. Let's see what else we got. Give a thumbs up, he will come. That is, do you think this craziness will last, Earl Takaki? Yes, I do. I think we're in wave 1, and what generally happens, if you study technical charts, they're really momentum charts or human behavior charts. Technical analysis is human behavioral analysis. It tends to go like this, wave down, and if there still has momentum, it builds, and bigger wave, boom, bigger wave, and then it may range trade for a while, and bigger wave. So we're in the little baby wave, and then the next wave is coming. Now, to when that happens, I don't know, but I think the craziness is going to continue. I think it could take some time. Let's see. Is this Hunt Brothers did this in 1980? This is different than the Hunt Brothers. Nobody's trying to corner the physical silver market. It's a bunch of little guys trying to get their physical silver. So I don't think it's quite Hunt Brothers. But I do think the margin requirement increase is similar to the Hunt Brothers trying to price people out of the market. They did that to the Hunt Brothers. They're doing that now to the traders. Comment by Gypsy Tree. JPM will just go long when they're ready. They never lose, or this would just change. Well, yeah and no, because think about it this way. If JPM and the rest of the bullion banks, the 4 and 8 most concentrated positions, which we know are bullion banks, you look at the COT reports. If they continue to do this and they run out of silver and people stand for delivery on the COMEX, they can have a default. Now, the COMEX can force negotiation in cash, from my understanding. There are people that participate in that market. But if there's zero delivery and there's it would call into question the legitimacy of the COMEX market, and we know Basel III is going to call into question the legitimacy of the London market. Those two things together could break the back of the Western gold and silver derivative markets, and it may break the back not only on the precious metals but on the rest of the commodity complex. Don't underestimate the power of the people. Never underestimate the power of the people. JP Morgan is not forever invincible. Let's see, gold, silver pros. So how do the banks eventually get out of all these shorts? Well, one thing that's my friend Michael, who's been a loyal follower for a long time. Michael, thank you for participating in the chat. I think, you know, the way they do it, they can play it a couple of ways. First of all, when you're a bullion bank, you trade for your own, it's called your house account and your customer account. When they have customer accounts, the top 4 or 8 positions, they have so much data, they know what people are trading. They know their positions. They know how to shake them out of the positions. They know if they get to certain levels, short and long, they can shake these people out of their positions, and they take money that way. They win the contracts that way because they know how the contracts are set up. The second way they do it is through options. So they know how people are positioned in options, and they can jigger those options. And think about it. If you slam the COMEX with a bunch of paper on the futures, and you've taken a bunch of short positions, you're going to make money on those short positions. You can offset your futures risk with a bunch of short positions. You'll be in the money on those short options. So there's a couple of ways that they do it. They trade against their book, and nobody tell me they don't trade against the book, because I worked for a currency broker once that said they never trade against their book. That was their whole marketing shtick. And then I saw after I left that firm, a couple of years later, I saw a report where they basically shut down, and it came out that they were trading against their book. All market makers and dealers trade against their customer books. They'd be foolish not to. They have all that information for free. You know, they get paid fees. The information itself is free about their customer positions. They get paid fees for putting the position on. Of course, they're going to trade against the position, and they can take options to offset their futures risk. And then they can do things like raising the margin requirements and shutting people out of coming into futures positions so that they have free reign to dump a bunch of futures paper on the market. That's how they do it. I mean, it's a game. That's how the game is played. It's nothing. It's nothing I haven't been doing forever. There's a paper I published in an article a while, this is maybe like a year ago, and I talked about it in videos this summer, where there's a guy, I think it was Jerry Markham, did a research paper on about 130 years of commodity trading history, and every single regulation they have is because of manipulation in the commodities market. So there's been a history of commodities manipulation since the beginning. That's the whole reason the CFTC exists. That's the whole reason all of the regulations exist. Every time they have a manipulation, they create a new regulation or a new agency. And then there's another way of manipulating, and then they got to create another one. So they've always been manipulated. And when you're a market maker, it's easier to manipulate it. It's easier to do that. All right, let's go back to Robert A says silver is used for electronics, Tesla cars, cell phones, going to the moon, solar panels, medical instruments, jewelry. Electronics is the major use, but all of those others can contribute. And going to space, you have to have silver. The technology company, you have to have silver. You can't have an iPhone, can't have a computer without silver, and computer without gold. A lot of gold's used on computer motherboards. So yes, silver is a commodity and a money. Somebody keeps saying GME in the chat. Yeah. This is silver. We're going to talk about silver here. Bitcoin and co not safe because hacking MP bombs, all money gone. Yeah, I'm not a big Bitcoin fan, but we're not going to talk too much about it. If COMEX starts refusing delivery and start cash settlement only, how long will that affect the COMEX collapse? You know, I look at the COMEX, if they don't do physical delivery, I kind of look at the COMEX a lot like I look at fiat currencies. 100% of fiat currencies have failed in history. Why? It wasn't just rampant inflation. It was rampant inflation and money printing, unbacked currency, and we've had, I think, 2 of those in American history. If you look at like continental dollars, greenbacks, and stuff. But the hyperinflation is a loss of confidence. When participants in the market lose confidence in something, they just walk away. And when you walk away, that market ceases to exist and ceases to have credibility. The COMEX is going to default and fall apart when people walk away from it. When the only thing in there are the bullion banks, and all they are is throwing short paper, and there's nobody to take the other side of the trade. When people, if they realize they can't stand for delivery and they're trading against the bullion banks, and the bullion banks know their book, because the bullion banks take these positions for a lot of these clients, and they're going to sit there and hammer you on the futures and take the other position on the options and make money off of you. You know that Reuters article that came out like a month ago that said JP Morgan made $1 billion in 2020 on the gold trade on the COMEX, the derivative markets. You know how they did it? It was the options and futures and trading against their book. That's how they did it. You know, when they're the only ones in the market and everybody else gets pissed off and says, screw this, there is no market. It falls apart. When you're the other side trading, you're tired of getting screwed. You're not getting the physical. You're tired of getting screwed in the paper trade. You walk away. It's gone. It doesn't exist. It goes poof, goodbye. It's a loss of confidence. That's how that market breaks down. How long? I don't know. That depends on you guys. That's you. It's the power of the people. It's not me getting on a video and ranting about it. Certainly my education helps. It's you guys saying, screw this. You know, but the hedge fund guys, they're gonna listen to you. They're gonna listen to their customers. They're gonna listen to what's in the financial media. All those articles we showed on CNBC, like 10 articles today on the silver short, the hedge fund managers follow that stuff. When you start raising awareness and people stop taking the other side of the bullion banks trades, the whole thing goes, ba-doo. And it's going to be, you know, the tend to move in herds. People move in herds, and so do the financial elites that trade the markets. So it's going to be a waterfall. It's going to be going along just like this, and then that's the end of that. That's what happens to fiat currencies. Go like this, and they go, and they cease to exist. Here's the COMEX. La da da, here's the LB mate. Da da da. It's going to cease to exist. It's going to go poof, and it's going to be a waterfall. So you want to be in your physical position before that happens. Let's see what else we got. Question from Raymond Wright. Why not let the longs from the shorts in the Big 8 calculation when calculating the impact of higher margin? Why not, net out the longs from the shorts? and the big 8 calculation when calculating the impact of higher margin, because if you look at the COT reports and study them over time, there are more players in the longs. The silver shorting has 4 to 8 concentrated positions. The longs tend to be a few more. Now, when you get into the hedge funds, there are less of them, but the longs are more disseminated positions. So the big 4 and 8 are short, more of a concentrated position. That's why you focus on that. Yeah, you can net everything out. I mean, there has to be a buyer and seller for a contract. But when you look at the amount of shorts being so concentrated, when we looked at the COT report in the longs, you didn't have the 4-8 concentrated almost 50% like you did in the shorts and silver. So that's why that matters. It's called market makers for a reason. It's the big guys trading against a bunch of smaller guys, a lot more smaller guys. In other words, big financial interests, more disseminated financial interests. And eventually, the big guys run the casino. But eventually, when the small guys figure out they're losing money and they just stop participating, that's why we follow it. That's why it matters. All right, let's get on to the next one. People selling their GameStop and other stocks for silver. Thank you, Aaron Steck, for that comment. Extras pyramid diagram, good demonstration of spectacular potential. Okay, yeah, let me get extras. Give me a second to look that up. I'll find extras pyramid and we'll put gold and silver on the bottom. That's a good point. Thank you for making that. Ooh, my Seeking Alpha article. Oh, you guys have got to see this. This is unbelievable. Okay, let me share screen real quick. Wow. Wowsy. This is a credit. I've written for Seeking Alpha for over 10 years. Seeking Alpha is like the largest crowdsourced site for you have a bunch of financial writers go there and a bunch of hedge funds and stuff, read it. And I wrote there for 10 years. I typed in Extras Pyramid. I'm the second article. Look at that, from March 19th of 2020. This is my article, Reimagining Extras Pyramid in a Panicked Market. That's me. You want to know how I know? That would be my picture and my name over here on the left. I've got the second article on Google for Extras Pyramid. That's awesome. That is freaking awesome. Let's see if I've got my... Let me see if I'll do the whole article. Okay. So John Exter was, in fact, hell, let's just talk about it. Let's explain who it was. Who was John Exter? John Exter was an advisor to Paul Volcker. Paul Volcker was a central banker who basically dealt with the last major inflationary episode. So John Exter was an advisor to Paul Volcker in his time at the Fed. He was also a central banker, John Exter was. His theory on the liquidity of market investments and how much risk they carry have often been cited by market observers who wanted to show where money flows in the economic crisis. So this is the original Exter's Pyramid. Now, my whole article is about reimagining from the bottom up. So Exter's Pyramid was done by a central banker. He was looking at it from a central banker's perspective. Me, on the other hand, I'm looking at it from an individual's perspective. So I reimagined it and wrote this article and kind of challenged his original vision and did my own vision. But at the end of the day, look at what he's got at the bottom, gold and silver. This is real stuff. This is derivative paper crap. This is the COMEX. This is the LBMA. This is some private businesses, stocks, government bonds, bankers' money or paper, fiat money. Base money, which is like physical money, and then gold and silver. What's more valuable? Gold and silver. When the stuff hits the fan, this stuff starts blowing up. What's more valuable? Gold and silver. Some more about Volcker. Volcker presided as chairman of the board of governors from 1979 to 87. His policies largely connected saving the U.S. economic system. Volcker raised the federal funds rate, which averaged 11% to 20% in June 1981, on the advice of who? Exter. Exter's Pyramid. So Exter developed his pyramid model and blah, 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 blah. I reimagined it for individual investors. This is mine, Gold, Silver, Pros. Check that out, baby. Check it out. And I put gold and silver at the bottom. And then I added the individual, because if you're an individual and you have labor and you're improving yourself, that's the next value up, because you're a physical human. You can exchange your labor and your knowledge for something of value. So I put the individual next, and then all the derivative stuff. Real estate, non-monetary commodities like sugar, wheat, that kind of stuff. Then commercial real estate, that kind of stuff. And then paper money, bonds. As you go up, there's more of it and it's more derivatized, meaning it has less core value. I can't believe my article is second on a search. Dude, that is so cool. A second on a search for Extras Pyramid off of Google. Yeah, that's awesome. Woohoo! Oh man, I'm so glad that you asked me to look that up. Kudos to the guy in chat that asked me to look that up. That's awesome. Fun stuff. All right, let's see what else. Jonathan, we're not buying silver. This is propaganda from the elites to pump up silver so they can sell and make their debt back. No, I showed you guys at the beginning of the video how individuals are buying silver. Yes, we're buying silver. The physical silver is run out. The only thing left is the derivative trade. Yes, they're buying silver. That's a fact. Okay, let's go back to that. I'm sorry, I have to dispute that comment. I'm going to be nice here. I'm not going to call names, but I am going to dispute that comment. How am I going to dispute it? Again, due to extreme volatility and demand and very limited inventory available, please check frequently for updates, and they're running high premiums. Okay. And an article from Bloomberg, silver coin site sees up as buying frenzy takes hold. I'm sorry. Yes, people are buying silver. I'm not trying to be rude, but that comment was wrong. It's in the financial media and it's all over all of these sites. They're charging high premiums for physical because people are buying it. All right, sorry. Sorry, Jonathan. I love you. I love you, brother. But yes, people are buying physical, and appreciate the comment. What happens if silver goes to 1,000? Well, if it goes to 1,000, you'll have a lot of people selling it back in the market. You'll see more silver come out, but also products will get more expensive. This is 1,000. Now, the price of silver is relatively inelastic, meaning it can go up a lot because in products it's used a little bit amount at a time. But I mean, if it goes to $1,000, and we're talking that's a factor of what, 30 something from right now, 33 times 30 is about 1,000. So it goes up by a factor of 33. Then yeah, products will get more expensive. iPhones, you guys can see that. I'll put it in front of my face so it didn't get blurred into the background. Look, that's pretty cool. My iPhone is now part of the background, but if I put it in front of my face, you can see it. Anyway, the wonder of Zoom backgrounds. Yeah, all of that would get more expensive. Now, it may only cost $1 to get it in here. So now you're talking about $33, but Apple's going to pass that charge on you. It's going to be $33 more expensive. You know, whatever you buy, solar panels are going to go up by a factor of whatever. I mean, that's what would happen. Okay, more comments. I'm trying to get more of your comments, guys. I'm going to scroll up a little bit. All these, Robert A says, all these folks who are shorts in SLV are here tonight crying, don't buy SLV or silver, must have bets against the silver today. James L., this guy is pushing lies. WSB said they're not part of this. No, I'm not pushing lies. I'm going to call you out, James. I've said twice in this presentation, and now the third time, I do not believe that Wallstreetbets and Reddit were intending this to be for silver. I said what happened was there were a lot of people already on the silver argument, and it spilled over because I believe WSB and Reddit is part of an overall movement that is part of fighting financial repression. And when you fight financial repression, you eventually get down to the bottom of what we just saw, Extra's pyramid. What was at the bottom? Gold and silver, not stocks, not GameStop, not AMC. Let's see if I can show that again. Let's just go back to Extra's pyramid. Okay, sorry, I mean, I don't mean to call you out, but you're the one that said it. Extra's pyramid. Oh, I don't have Extra's pyramid on that. Here it is, Extra's pyramid. So if you're fighting financial repression, which is really what this movement is about, if you fight it up here at the stock level, at the derivative level, you're not really going to take out the repressors. You got to fight it down here at the money level. That's gold and silver. That's why the WSB movement moved to gold and silver, because you're going to, if it's part of a movement across the world and you're fighting repression, you got to get to this. That's why. So I never said it was originally about that. That's the third time I've made that point in this presentation. It was about financial repression, which is why it came here, because this might be the most suppressed asset in the world. GameStop and AMC are not the most suppressed assets in the world. Not even First Majestic with 23% shares is the most suppressed asset in the world. It's this. That's why it went here. It was always going to go here. Now I credit Wallstreetbets and the Reddit crowd for starting this. And I've credited the millennials for getting involved and stepping up as a generation and fighting the repression. I did that multiple times on our live streams over this weekend on Arcadia Economics channel. And I'll give credit where it's due. So yeah, I give credit to the Reddit crowd. I give credit to the millennials, anybody that's following that movement. But it always was going to go here. This is the bottom of the pyramid, guys. It was always going to go here. All right. Let's see, extra pyramid and anatomy of a bubble at 2 charts I have pinned to the wall. There you go. Good job, John Michael Karma. Inkjink. Yes, I know Reddit is not talking about silver. I just made the point that they started a movement which is spilled into silver and you can't stop it. I believe in the description of this video, I made that as well. If you read the description of the video, I said, I don't think they started it to be a silver movement, but it was inevitably going to get here. I've now said that 4 times. And yes, I have pulled up Reddit. Okay, question here from I Be Lyrical. Okay, got it. Robert, is this whole thing a way for the powers to be to kill the dollar? X-Prez gets censored, but Reddit folks are allowed to move markets. I don't think they're ready to kill the dollar yet. There could be some political stuff behind the scene or some powers be behind the scene. Chris and I talked about this weekend on some of the options call, which is now up on his Arcadia Economics channel. I think there could be some of that behind it. I don't think they're ready to kill the dollar yet, though, because they're not ready to move into digital currencies. I've got videos on my channel talking about the IMF published 50-page paper saying they want to move into the digital euro, the digital dollar, all the digital Fed coins, if you will, and eventually get out of cash. They actually said they want to get people out of cash. They want to eliminate cash. It's in the public. It's not a conspiracy theory. I've documented on my channel. I've documented on my website the 50-page paper published on IMF website and their blog post talking about doing this. And I've documented news articles where 50 central banks are on board with it. The BIS is on board with it. The IMF is on board with it. This is all in the public press and on their websites. Not conspiracy theory. They printed it. I reported it. So, but they're not ready to do it yet. So they're starting to talk about it. Christine Lagarde, the IMF is talking about it. BIS started talking about it. The Fed started talking about it. That's why they got Fed Now, which is that system to put money straight into the bank account. I've documented how they're going to do negative interest rates on your bank account and push you in electronic money and get rid of cash. It's all publicly available on my YouTube channel and website off of their websites and in the financial press. They're not ready to get rid of fiat yet. I don't think this is a move to kill the dollar. I think the people are questioning the legitimacy of the financial system and the dollar, and it's the people doing this. And then the financial powers are dumping the contracts for COMEX to keep the price of this below 30, because $30 of this is a psychological level, and that could break the dollar, and that is what they're trying to stop. They're not quite ready to go to digital currencies yet. All right, let's go. What else do we got? James says, I think all of it's planned for the Great Reset. I think it's planned, but Wall Street is not. And I don't think it was planned, all these people piling into silver. But I do think that the Great Reset is planned. The Great Reset is underway. So I'll give you credit on that, James. Good point there. Let's see. Can someone set up a crowdsource to take bars off of COMEX and make private bars and rounds? Ooh, Paul Mark, that's a good idea. Crowdsource, GoFundMe, something like that. Somebody start that. It'd be awesome. Somebody start something like that. We'll go to COMEX, we'll stand for delivery, and then we'll distribute the bars. It's a great idea. It's perfectly legal, and it's a great idea. I love that. Thank you so much, Paul Mark. Paul Mark, email me at robert@goldsilverpros.com. Paul Mark, and validate yourself if you can. Validate your Google account somehow, and I'll send you a silver bar just for that comment. That was awesome. I don't know how we're going to validate you, but if you can do that, robert@goldsilverpros.com, I'll send you a silver bar. Awesome comment, Paul Mark. Awesome idea. Justin White, if paper silver decouples more from physical, do you think the minor stocks will track the paper or the physical? Okay. Eventually, they'll track the physical. Right now, they're a form of derivative, leverage derivative investment. I think they'll track the paper. The great thing about it, though, is especially if you're a gold miner, they're making money hand over fist. So I think they're going to do well. But I think eventually, when these other derivative markets break down, people can't find the physical, they're going to go to the mining stocks. So I think part of maybe wave 2 to wave 3, somewhere like wave 2.5, is mining stocks. Now, again, I like a lot of mining stocks. It's part of my portfolio. It's up to you if you want to make it part of yours. I start with the physical first and then go to the mining stocks. But when they run out of this, people are going to go to mining stocks. Why? Because they've got future reserves in the ground. Mining stocks are future reserves. We're already at a silver cliff. 2027, we start to hit the gold cliff. If you can't get it from the COMEX and the LBMA because they run out, you can't get it from Miles Franklin and Gold, Silver, and all those bullion dealers. Where are you going to get it? The miners. They're the wave after this one. This is the physical. Moving into the miners will be next because they have future delivery of the metals. And I think that's probably how that will work. Let's see. Good question. Anthony says, after my house sells, I'll have an extra 500K to put into pulling silver out of the COMEX. There you go, Anthony. Go get him, baby. Go get him. Miguel says, I don't know about those brainless investors, but I made over 5K today on silver day trading. Good for you, Miguel. I wouldn't call people brainless, but good for you. For whatever reason, your audio is kind of choppy. Sorry about that, Rusty. I'm on a wireless headset because I'm traveling. I don't have my studio set up at home. I don't have another way really to do this. This is a nice headset. It's a Jabra, but it's probably some interference either on my end or your end. I'll listen to the video when we play it back and see if it's on my end. Apologize, I'm traveling. I'm not at the studio. I'm at a hotel. So wireless internet, wireless headphones. What are you going to do? But when I'm at my studio, everything's wired and it's really, really good. So sorry about that while I'm traveling. James says, I want to apologize for saying you're pushing lies. Your explanation made sense and trying to figure out who's telling the truth. James, it's all good, baby. Thank you for coming to the chat and thank you for making the point. All is forgiven. Thank you for supporting me. Hopefully we can educate you. And I appreciate your comment because your comments help us to address the rest of the audience. So I do appreciate your comment. No worries on that. A lot of people are trying to figure this out. That's the shell game they play. That's part of the financial suppression game. It's the shell game, right? And we have to all figure this out and we do it together. So it's all good. Come to my channel anytime. Happy to answer your questions. Thanks for what you do, Rob. Time 20. You are welcome, sir. GME will be shorted to its knees. That may be the case. AMC as a whole until the lawsuit settled. That may be the case. Mike Shoemate says GME back to 20. That may be the case. Greg Smooth says buy the dip. I agree with you, specifically with silver. Ryan Hall, what stock should a speculator be on silver be in now? I'm not going to speculate on that, but I may go into the miners. Oh, Michael's got another one. Gold, silver pros, one more question. When all of this blows up, what exactly happens to SLV? How does that break and what does it look like? Thanks. Okay, great question, Michael. I love you for asking this question. I love Michael because he's been studying this for a long time. He's been one of my followers and he asks the best questions and it's fantastic. SLV is a derivative. When I interviewed Nick Beresheff, the president and CEO of BMG Group, he's owns a precious metals fund up there in Canada, and he said he went through the authorized participant documentation for GLD and SLV back when it was available. I think it was on Edgar. It's not available anymore. You can't find it. They don't publish it. So he went to all the original documents of how they set up the GLD and SLV, and he said the way it was set up is there's no way based on their fee structure for them to pay for all that gold, store it, secure it, all that stuff. So he believes based on that and the flows into those funds that it's leased gold and silver from other places, whether it be these other markets or central banks, so on and so forth. So it's leased gold, meaning if you're in SLV or GLD, you don't have claim to it anyway. The share structure is such that you can't take a share of SLV and GLD and get the metal. Secondly, it's hypothecated gold and silver in there because otherwise they'd lose money and they'd go out of business. So it's a derivative on top of a derivative. And so what it does is it's artificial demand for gold and silver, because if people want to get into gold and silver and they're in some sort of fund and they don't want to hold it physically, you're going to go to GLD and SLV. But it's a synthetic derivative on top of a synthetic claim on some physical metal that you can never touch. So when people figure that out, and they know that the physical runs out and we have some sort of financial crisis behind that. I think you start to run out of physical and there you have a financial crisis of some sort in the banking system. They realize that SLV and GLD have no core value proposition. When the paper markets break, SLV and GLD aren't going to track the price of physical gold and silver, and you can't get the physical gold and silver. They have no value. There's no utility there. There's no value. That's when they break it. That's when they break up. And that's when the lawyers come in and the arguing starts over what do you do when all the shareholders get screwed in GLD and SLV and there's no metal backing it and they have no claim to the metal and it was all leased metal or a lot of it was leased metal and people are screwed out of their positions and all that value goes poof. So that's why, in my opinion, you don't want to be in it. Again, not a financial advisor, but there are too many risks there. However, if you want to validate some of these things, even though the authorized participant manuals are not there, you can see the prospectuses. And if you look, I think on the GLD, it's like page 6 or 10, I don't remember, go look at it. In the prospectuses, there's this list of risks, and the risks basically indicate that the funds themselves, GLD and SLV, have no power over the custodians holding the physical metal. The custodians could not have the physical metal, or it could be hypothecated, meaning it's not really owned. They could lose it. They could have false audits. And there's no liability from the GLD and the SLV towards anything that happens to those funds. So the funds could go broke, and they have all these disclaimers. So regardless if there's physical in there or not, I wouldn't touch it, because if you look at the risk, it's like, yeah, hand me $20. It's like that South Park episode. I think it's Cartman that goes in, he puts some money in, and the guy says, "Oh, I'm going to invest it in mutual funds," and it's gone. And it's like 2 seconds later, has no money. And I'm sorry, sir, you're not an account holder at the bank. You have no value. Please, go away. That to me, that's what GLD and SLV are. You're going to put your $20 or $100 in there. There's no real value, and all of a sudden they're going to say, "Oh, it's gone. It's gone. You got nothing." Right? And that's what's going to happen. So I think that's the explanation there. All right, Fat Vegan, why on Kitco spread 28.2901? So Fat Vegan, that is the bid-ask spread. So the bid-ask spread is one way in which dealers can make money. So the bid and ask is the difference between what they pay for it and they ask you for it. They'll also add premiums. Okay, so there's a bid-ask spread and premiums. But the bid-ask spread is the difference between the bid and the ask. That's a measure of liquidity. When that bid-ask spread widens, that means they're having trouble finding it. There are issues in the supply chain, like we saw with the shutdowns and the pandemic, or there's just lack of availability. That's why that bid-ask spread widens. That allows them to protect themselves. It's kind of like you can use the bid-ask spread to protect yourself if you're a dealer. You can also play in the futures market and hedge your risk. There's two ways to do it, but that's why it's spread out on Kitco. Yeah, I answered that question for you, Fat Vegan. It goes from 10 cents to $1 because of the risk in the system, and it's a way to protect their exposure to the market when you have a lot of volatility in prices moving up or down, either way. Robert talked about how digital currency can be resisted, prevented from Greg Phelps, privacy will be dead. Yeah, the whole move to digital currencies is basically so they can track you. There's an MIT paper, go search this on the internet, which said Bitcoin is 100% trackable for two reasons. One, the blockchain is a perfect tracking mechanism. And two, the only way to get in and out of the blockchain, the on and the off ramp to the blockchain highway, is through the banking system. And guess what? They can get a warrant to see who you are making transactions on the blockchain or putting money in or taking money off. There's already banking laws that says they can do it, or they can go to a FISA court. If you're a big player, you can go to a FISA court and get a warrant without just cause or whatever the standard is there. So there's complete lack of anonymity. And if they get cash out of the system and they go to these digital coins and they go to negative interest rates in the banking system, which the IMF in a blog post detailed out, and I put on my website on YouTube. When you get money in, electronic or paper doesn't matter, and you put it in your banking system and they take a negative interest rate on it, you put 100 in. This is the actual example used on the IMF blog, by the way. I'm not making this up. This is their example. You put $100 in, they give you 95 $. They've taken 5% of your value. That's the fee that they use to support the system. It's basically they take that out of the system. It supports their money printing. It's like inflation. But it's like reverse. They take it right at the beginning instead of printing a bunch of money, and it happens at the end when you go to spend it. They take it at the beginning. So you trade your labor for digital dollars. They subtract it 5, 10, 15, 20%, whatever. And they actually said in the paper they can go to whatever level they want. They can do 99 if they wanted to. That was actually a quote in the paper. If they need to drain money out of the system and keep it from hyperinflating and support all of their digital money creation, they can discount it as much as they want. They literally said there is no bound. So anyway, that's what happens. That's how they control the money. And if it's digital and your bank account is digital, they pass one law that basically says if they suspect you of money laundering, terrorist activity, national security, or you're not following some statutory law, they push a button, they turn your bank account off. How are you going to transact? That's a risk. Now, they haven't passed those laws yet, but I did document a couple of months ago how there were two bills floating around Congress. For one, managing the private cryptos like Bitcoin, Litecoin, Ethereum, all those, and managing them through like the SEC, so they can control it. They can control the flow of that. They can manage it. In other words, they can de-emphasize the private cryptos. And then when they get their Fed coins in, the digital dollar, so on and so forth. There was another bill still in Congress right now, which allows them basically to do that. And it allows the central bank, the Fed, to basically take money through the FedNow system, push it right into your bank account, or pull it right over. So if they can push it in your bank account, that also means they can pull it right out of your bank account, and they have complete control. So that's what the digital currencies allow. Okay, I'm going to get off that subject because we're talking about silver today. I love block function, later by Daniel. understand, Daniel, it is a beautiful thing unless the powers that be use it against you. Fat Vegan, I would buy stock, but physical is the only way to go. Hey, I'm all down with you if you want to go all physical, baby, but you may have to get it in now because I don't think there's going to be a lot. A Galaxy Discounter says, I think Eric Sprott finally had enough and he and his friends are bringing the thunder. That's right. Eric Sprott is bringing the thunder, baby. Keith Neumeyer's bringing the thunder. And the people are bringing the thunder. The millennials are in there bringing the thunder. Time 20, never seen Rob so animated. Hey, man, it's a live stream. Let's get down and boogie with it. No, I'm not on anything, by the way. I have had some caffeine. I've got my Diet Dr. Pepper going on. That is my vice of choice. No drugs. I don't do drugs. No alcohol. I've been working all day long, but I'm on my diet, my DDP. That's what's got me jacked up. I had some chocolate earlier, so I think I'm like on a caffeine overload. So I probably need to get off that stuff. I'm never going to sleep. I added Lenko Bear says I added another 500 ounces to the stack this weekend to do my part for the Great Silver Siege. There you go, baby, Lenko Bear. I'm down with you. Down with you. Anthony, silver up 28.62 USD at the moment, should be 50 before London Open if it maintains velocity. Positive, the power of positive thinking. Speak it to see it. The universe listens to what you speak. Speak it to have it come true. And then what it says, I've told them that if they buy PM stocks at all, to stick with the high percentage producers only, but stick to physical. Good job. Good job. Rusty Shackelford says Monero cannot be tracked. Now, Monero does have some cool privacy features. I'm down with you there. But remember the on and off ramp. Here's the highway. And you got the on ramp and the off ramp. To get into Monero, where do you go through? Is it banking system, right? So if you fund it, they got your little code. So yeah, it may take more investigation on individual private transactions, but they know you're getting in and out. And then if they get a warrant and they can seize your Monero key, they can get in there. So I agree. Not as easy as Bitcoin, some of the others, but they can still get you with a court order. Leonard Harview, what would be your take on if some critical mines in critical countries get nationalized due to the possible moonshoot in PMs? You know what? That's interesting because I think some countries could nationalize, although, you know, I don't see a lot of nationalization threats right now. In Indonesia with the Grasberg mine, Freeport-McMoRan, the copper gold porphyry mine, they said, teach us how to do it. We want a higher percentage of the profits, but they're sharing it with Freeport-McMoRan, and they didn't nationalize it. And in Mexico, I think they're doing some tax stuff. They want their taxes like First Majestic. They're trying to hold First Majestic to a more restrictive interpretation of a deal they did years ago to get one of their mines. I don't know if it's San Dimas or one of the other ones. I can't remember. So yeah, they're doing some things maybe to get more involved. But at the end of the day, it's their resources. So I kind of understand it. I'm not advocating or not advocating, but I kind of understand. I kind of get where they're coming from. I haven't seen them nationalize a bunch of mines. Maybe they're doing it in some third world countries. I don't know. Yes, there's a threat. If they do it, yeah, it's a threat to your stocks. I would think where the mining industry brings millions or billions of dollars of revenue through taxes and brings jobs, they would be stupid to nationalize it. Now, if we get into some sort of shooting war and we really need silver for military purposes, or you really need gold to back a currency that's falling, could they nationalize? Yeah, but I think what they would probably do in the major districts like US, Canada, Mexico, Australia, they probably would nationalize it, probably just take a percentage through taxes, or they would do something. They may buy production at a discounted rate to get the physical metal that they need. I don't know. Not sure if they'd nationalize it. I think at the risk, it may be a bit overstated, but we'll have to see. All bets are off. We get into a shooting war or a total financial meltdown. Those types of things would cause governments to kind of go off script and do something. So another person saying silver is fake news. Silver is not fake news. We've been documenting this for about 20 years, but thank you for the comment. WV Poker Dealer, have you looked into iTrust Capital Roth IRA physical silver and gold? I have not looked into that specifically, but my wife does own an IRA that's in silver. And she did that because she had a qualified account. She was leaving her company. She did not want to go back into stocks. She had some problems with the stock, the fund management company she was in. They lied to her. I won't get into that and say who it was. She said, Rob, I'm going to push metals. She went to IRA and did this. So if you find a reputable IRA company, do your own research. That could be one way to hold it. I'm not your financial advisor. Again, disclaimer, fourth time in the video, I'm not your financial advisor, but we do consider it as an option. Talk to your financial advisor. It could be a good way to hold metal, but understand the risks there. Understand who you're putting it with and what your redemption rights are if you need to get to it. All right. Guys, we have been going for an hour and 40 minutes. I'm going to cut it off here pretty soon. Looks like battery running low on one of my computers, by the way. So let's see if I can get one or two more questions in. Will gold destroy the Federal Reserve Bank? Could be gold-backed currency. I'm with you there. Your worthless paper money is going down. Hedge with real money assets like real estate. Hey, Slim Dan, I don't mind real estate, especially if it's farmland. Farmland is probably, I mean, gold and silver, they are making some of it every year. They're not making any more farmland, especially people building, building improvements on real estate. So I'm down with you for real estate. Although I'm not sure rental properties right now that could be in a bubble, but farmland, I'm okay with that. Someone get Elon Musk to tweet about silver. That's right, we would blow it up, wouldn't we? Elon would just like blow up the internet if we talked about silver. Don't like silver, sleep on your fiat, going to need a wheelbarrow with China Biden in office. Okay, political comment there. 2018, Russia sells 84% of treasuries, today owns 0. China said they're going to sell 24%. You're on it, baby. If you follow this propaganda, you deserve to lose money. Well, we'll see. Question from David Pritchard. Do you trust OUNZ as a pure gold liquid ETF? I don't know anything about OUNZ. Send me an email, David, to robert@goldsilverpros.com. I'll try to do a review of it for you. I don't have time on the video. robert@goldsilverpros.com, David Pritchard. Send email OUNZ as a pure gold liquid ETF. I'll try to answer your question. Daikim says, I have physical silver today. I bought First Majestic first time, trying to keep it 3+ years in my safe at 2144. In my opinion, probably yeah, but honestly, because of the shorts on it, especially if we pop $30, $35 silver because you're going to print money, I would say yes. What my friend Chris Marcus did last week is he took options on it. That's a way to kind of play it a little bit more safely because your options are in the money as the price goes up. I don't know if you're safe in the stock. I tend to think First Majestic was undervalued at 13 at 2144. That may be, a short-term pop. I honestly don't know. I mean, if silver pops 30, $40, all bets are up on First Majestic. The shorts get squeezed. The price could pop, 60, $70. I don't know. We'll have to see what happens in physical silver. Let's see. Where would Bitcoin be on Extra's pyramid? I would say somewhere closer to the top because it's a derivative. People will scream at me and say, there's value in Bitcoin's got utility. What if they shut off the internet? What if they make a law that says you can't trade Bitcoin? Remember that law I told you earlier in Congress about regulating the private cryptos? What if the ISP shut down Bitcoin transactions? What if you lost power? What if we went to war? How do you trade your Bitcoin? What if you lose Bitcoin? What if you get your wallet hacked or you print it out on a piece of paper? All these people print on paper and lose the paper. Print out like a QR code type of deal and you lose that paper. I realize Bitcoin does have some utility if you're sending funds overseas, but it's so slow, 7 to 8 transactions per second. I mean, if you're going to get into one, hash graph, faster transactions, better transaction validation, better security. Not that I'm saying to get into Hashgraph, I'm not recommending it, but Hashgraph's probably better than most of the blockchain ones in my opinion in terms of security, transaction validation, but they all suffer the same. If the stuff hits the fan, gold and silver, and even cash is going to spend better than will Bitcoin, Monero, Hashgraph, all those. I mean, it just will. If we don't get there, hey, more power if you want to trade. I'm not going to say don't, but there's more risk. And I've done some videos on that. And by the way, I'm saying I have 25 years in tech, master's in cybersecurity, graduated first in my class, honor society, all that stuff. I understand the white papers when we read them. I understand Bitcoin, Monero, all that kind of stuff when I read the white papers. So I'm not just a financial guy. I have a lot of tech experience. I'm not real big on those, to be honest with you. But at the end of the day, if you want to do them, that's fine. I mean, it's your choice. That could be a hedge for you. It's all good. If that's what you want to do. I think there's a little bit more risk, but hey. But this isn't really a Bitcoin channel. Aaron says, Gold Silver Pros, would you buy silver at this price now? I'm always buying silver. Dude, I'm always buying silver. Yes, I would, yes. Looking at junk constitutional for entering the physical realm? Yeah, they call it junk. It's 90% or 40% silver. It's what the U.S. used to have in their actual physical coinage, quarters and dimes, half dollars. I do not own Bitcoin. All right, guys, I think I'm about to cut this off. I've got a computer here about to die. We've been going an hour and 40 minutes. It has been my absolute pleasure joining you guys today. Thank you so much for the questions. Thank you for interacting. 1,000 guys in the chat. This has been absolutely awesome. Appreciate you guys so much. Tomorrow I'm going to have a video for you guys. We're going to go switch back to gold. Tomorrow I'm going to talk about a potential really big gold find there, the gold cliff, and why gold could become more important. So stay tuned for that. It's coming out tomorrow. This has been Rob Keens with Gold Silver Pros. I appreciate you guys a lot. Thank you for sticking in with me. We're going to go ahead and